This is the weekly economic and market update for the week ending October 14th, and I look forward to October 17th. And if I were to describe what's going on in the with economic measures and the market right now, it's that good news is bad news and bad news is bad news sometimes. So what we experienced this week was on Thursday we had almost a 550 point drop after the CPI numbers came out a little bit hotter than expected by 1/10 of a point, I mind you. And it dropped 550 points, and then apparently people were covering their shorts, and there was some decent earnings reports, but we wound up 950 points, a 1,500 point swing. Wow. It was quite the day, and it happened very quickly if you weren't watching the markets. But we ended the week on a down note today, with the Dow down almost. Taking a look here, it was down 400 points or so today. Yes, 403 points. And so not everything that we gained yesterday we gave back. You're looking for some follow-up. So if you're a bull, you're probably looking for something to go higher. If you're a bear, you got what you wished for. So no confirmation really on yesterday's dramatic increase in the market. So where do we stand? Investor sentiment right now as of Wednesday night was that people were 55.9% bearish. That's just a percentage tick up really from the week before, and certainly still down from the 60.8%. Where would people be right now? Well, if it was yesterday, there would probably be less people that were bearish, or Thursday this week. People would definitely be a lot more bullish and less bearish. And then after today, the psychotic market continues. So that's where we stand as far as investor sentiment. And we look at the fear and greed index, extreme fear in the markets right now. And, tomorrow's or Monday's another week. And who knows what's going to happen kind of from here on out. But one major event, one thing to look at is the 10-year Treasury, as I do every week. And that is the 10-year Treasury ended the week over 4% for the first time in 14 years. And it was quite the week. It was up around 4% at the beginning on Tuesday, and then it just kind of went down, went up, peaked at little 4.03%. I mean, it's not where you can be really optimistic about things when the U.S. 10-year Treasury is at yields are at a 40-year high. So that's what we face, right now. Looking at some of the key things that are driving the markets, we look at the dollar, and after it, we had a pretty good rally when it went down with the dollar, weakened to $110, and now we're basically back up at 113. If that continues to rise, and does it, if that's a lower high, I'll take it as some type of downtrend. But if it continues up, then you can expect people looking at the dollar milkshake theory, and this thing, as Brent Johnson is talking about, 120 and then 150. So if it gets that far before something breaks and the Fed either pauses or reverses course, we look at the crude. It hit a low around $76 a barrel, a little under, and right now stands at about 84 almost $85 a barrel. And, the VIX is still elevated right now, which just means we have a lot of volatility. Volatility can work in, two ways. And that's kind of the story as far as the markets go at this point. Looking to the economic calendar this past week, we can see that the PPI was up 0.4%, and producer price inflation is certainly an input into the CPI and the PCE, which we don't get till the end of the month. On the 28th, which is kind of what the Fed follows as the PCE. So it's up 0.4%. And, it had been starting to back off, gave us some hope that maybe some of this inflation would abate, but now it's not looking like that, in essence, is going to happen. Let's look at some of these other things here. Well, the FOMC, basically they came out and said, we're hawkish. I mean, that's basically what they've been saying all along. We're not changing until something breaks, and then they'll have to change. The core inflation rate ticked up to 6.6%, and we'll get another reading in November, on November 10th, but the expectation was 6.5 on the core. And we go back to the CPI, basically here we had an expectation to 8.1. It was at 8.2. Now it's ticking down. It went from the high of 9.1%. It went to 8.5, 8.3, 8.2. So it's headed the right direction. And it's if the consensus was that it was going to be 8.2%, who knows? I don't know that there would have been much reaction in the market. But with the volatility high in the markets right now, any miss is, like I said, bad news is bad news. And certainly 8.2% is not something that we want to live with here in the U.S. Let's see, what else was this week? It was important. We came out today, retail sales. And again, these numbers, when they go up like this, even though 0.4% doesn't seem to be a lot, it's something that, shows that, there's still, sales out there, and the Fed's sitting there thinking, oh, everything's fine, but we're paying higher prices for our retail sales. So that poor 0.4% may be, at least in part, associated with the inflation that we're seeing and things that we need, like clothes and things of that sort. So that's retail sales, which is, good news is bad news, right? Let's take a look at the Michigan sentiment. And again, good news is bad news. The sentiment was up from what their expectation was, that it was going to come in at 59. It came in at 59.8. And again, if your expectation is that the Fed is going to revert or pause or pivot or whatever you want to call, pause would be welcome, I think, at this point, as they're just, bullying their way ahead to try and fight inflation after doing nothing for probably 22 years or longer. So trying to make it up all at once. And, as I've said before, something will break in the markets. It could be the credit markets. It could be other countries finally say, hey, everybody's going out of business around the world. So, and the dollar milkshake theory is coming to fruition. Let's see. Let's take a look at what's coming next week. It's primarily in housing. So that, there's not a ton other than building permits, it's expected to be 1.53 million. We'll see what it comes in at next week on Wednesday. Housing starts, again, an important number. It was kind of surprising that we went up to 1.575 million housing starts. And then on Thursday, we get the existing home sales, which has been kind of trending down. So we'll see what that number is. Expectation of just a little under 4.7 million. So we'll see how those numbers go, and that's really it for next week. And a lot of the PCE will be the big one that we'll be looking for the following week, if that goes up, then look for the Fed to reiterate its bullish stance. And bullish in this case means like a bull in a china shop. So that is it for this week. Again, it's the typical things that everybody's looking at where the Fed has so much control. I will make a comment here about energy and how important it is, and how we could almost immediately, well, it's not going to be immediate now because we have to, some things would have to happen. The president has decided that he does not want leases in certain areas that could help with our plight, as well as Europe and other countries all paying more for gas. Now, it would create a lot of jobs if we had a better energy policy. We need to start pivoting towards nuclear energy. The wind doesn't always blow and the sun doesn't always shine, and to have reliable, cheap, green energy like nuclear definitely is something that we should be doing right now here in the U.S. Now, there's 90, I believe somewhere around, it's just a little less than 100. I think it's 96 nuclear plants in the U.S. today, but you have, not my favorite, Bill Gates, but he has TerraPower. They're building, I think it's Montana, a plant. It costs $4 billion. But with the amount of money we spent on research about climate change, we could have built probably 30 plants by now, but we have to research it because that's what government does well. And so if we were changing our energy policy, the only way to do that is going to be change who's in the in the House and in the Senate. And I'm a libertarian, probably 60% libertarian, 35% Republican, and 5% Democrat, some makeup like that. But with the things that are going on, the spending, our energy policy is just it's not helping the situation that we're getting into. Be nice if we could have a president that was looking to get rid of the Fed too. They play nothing but a tampering entity in these financial markets. So that's what I wanted to cover this week. And remember, there is always a better way.